You are the host now.
All right. All right, Mike. So thanks we're kicking off 2021 with this lecture. And yeah, looking forward to it.
Oh, Richard, are you recording? Oh, I see it. Never mind. Cool.
Yeah, so all right. I'm gonna kick off 2021's learning lectures with Intro to Securities. So this will be a very basic sort of a 101 for dummies kind of intro. So if you're expecting any more advanced, we're not going to get that deep into it. So let's start off with the very basic of what is a security. And yeah, we have a technical definition. It's a fungible, negotiable financial instrument that holds some type of monetary value. Essentially, all that means is that it's financial assets, whether it be a stock, bond, or some other type of a financial instrument that you can trade, you can buy or sell. And some examples of securities, which I mentioned a little bit earlier, was stocks. And then there's also bonds, mutual funds, ETFs, derivatives. If you ever heard of things like gold futures and oil futures or options. So these are different types of securities, and I'll go over each of them individually in more detail in the next upcoming slides. So we'll start first with common stocks. And common stock is pretty much a security that, represents ownership in a corporation. So I know before my time, there's stock ownership was represented through pieces of paper, right? That you had this piece of paper that you could say that, oh, I own part of, I guess like Merrill Lynch or something, or Goldman Sachs. But now everything is done digitally. We have a lot of online brokerage that you can just purchase and sell stocks with a click of a button these days. And stocks is usually denoted in units called shares. So let's say you buy like 10 shares of Apple, 5 shares of Tesla. That's usually how you purchase stock, at least common stock, as far as unit wise. And sometimes you may or may not hear stocks jokingly referred to as stonks. And when we call stocks stonks, we're buying stocks playfully. Usually younger generations, especially like millennials or Gen Zers that like check out forums like Wall Street Bets, they tend to buy stocks as if they're fun little toys to gamble with, and they look for the adrenaline rush of the volatility of like certain stocks like Tesla and such. So that's where you make fun of it by calling it stonks that always, as they say, go to the moon. They never crash. And yeah, so another security that you may or may not be aware of are also bonds. And essentially a bond is a loan. And there are multiple types of bonds, some issued by the government or some cities. Corporations also issue bonds as well. We may all be, at least for people that lived in the US, we're aware of US savings bonds. Maybe you received it as a gift when you're younger or such. And usually you would hold these savings bonds until they would, you hold them for like several years, maybe 10, 15, until they reach what it's called maturity. And from then, once the bond matures, you can redeem it based on the interest, or they call coupon rate sometimes, based on or coupons that the savings bond earned over the 10, 15, the time period that you held it for. And so So next type of security that I'll go over is the mutual fund. And mutual fund in general is it's I guess a fund, but it's like where investors like multiple or like hundreds, thousands of investors pool money together, and you have a fund manager who goes usually selects different stocks, bonds, securities, such that they diversify and select what they think will best will give best returns for people that invest in their mutual fund. So one analogy that I've heard of was pretending that the mutual fund is like we have a grocery store shopper. We'll say the shopper at the grocery store is the mutual fund manager, and then for simplicity's sake, we'll represent bonds as vegetables and stocks as fruits. So then the grocery store shopper slash mutual fund manager will grab different types of fruits and vegetables and put those all in the basket. And that is your mutual fund, which is like a mixture of stocks and bonds, but of course it can include other securities as well. And they'll use your pool of money to pay for all these fruits and vegetables at the cashier. And yeah, that's one way I've heard of a mutual fund being represented as a way to simplify the idea for people. So yeah, from mutual funds, you probably also heard of things like exchange traded funds or ETFs, which are similar to mutual funds as well, but there are differences. They can track things such as an index. And what an index is like, let's say it's like a list of stock that capture a certain part of the market. Sometimes they can track things like industry. There can be like airline industry indexes, medical industry indexes. There can be an index that just tracks the top 500 companies in the market, which you've probably heard of as the S&P 500. Or if you heard of the Dow Jones index, then that tracks the top 30 companies in the US or as the world. I forgot about the Dow Jones. And so it's pretty much the same basket, but it tracks like a certain section of the market, as I'm referring back to the analogy of the grocery store. So there are other smaller nuanced differences, such as like they can be traded at any time, unlike a mutual fund. They get like instead of mutual funds, which are like purchased or sold at the end of the day when the market closes, exchange traded fund can be bought or sold at any time while the stock market while the stock exchange is open. So going back to airline industry, I'm going to go over an example of a particular ETF, which is the Jets ETF. And this pretty much tracks the airline industry, and they will have holdings on all the airlines, or they'll have stock. This index will have stock on all the airlines in the world. And the amount of stock that they have is proportional to usually to the market share of each industry. So going through a short list of their particular holdings of jets, just let's say the first four, we can see that they have stock in Southwest, Delta, United, American Airlines. We can see the number of shares they hold for in jets for each particular airline, and the amount that that per share that they hold in the monetary value, pretty much, of all the shares that they hold for each airline that they hold.
Just as a correction, Jets is
Yeah.
only the holdings of American Airlines companies,
Oh, okay.
not the world.
Gotcha. So yeah, there's a more comprehensive list on their website. So if you do want to take a look of which airlines they do hold, then you can just yeah, it's easily viewable on the Jet ETF website. Where's the oh shoot. So yeah, let's see. Going back. So yeah, this information can be easily found online. Um, Next up, as far as other securities, I'm just going to go over more advanced securities that you probably shouldn't worry about as a beginner. And these are derivatives. Sometimes you hear about things called about oil futures or gold futures, and you hear about options as well. Um, this will something I advise you to learn more about before you start getting into them. But essentially, they're let's say starting with futures. They're let's say an oil future is a contract where you can buy uh, these commodities, say oil, at a specific price at a specific date. So, for example, let's say for oil futures, let's say that you want to buy like oil for like $50 a barrel 2 months from now, because you think oil is gonna go up, the price of barrel of oil will go up. So then you buy this future contract such that you can purchase oil, like say $50, because you think in 2 months maybe it'll go up to $100. And in that case, you end up purchasing oil at a cheaper price because you set a fixed price that's lower than what it'll be 2 months from now, which you can purchase at that time. Options, similar to futures, but you're not obligated to buy, and usually it'll be used for shares of a company as opposed to like a commodity like oil or gold. So, with the brief introduction on securities and a general overview, let's talk about one way of purchasing a security, and that's by opening an account with a brokerage. Um, and there are several brokerage these days that you can open account with. You just apply uh, with some bank information, and you transfer, let's say it's maybe $1,000 into the account, which you can use to purchase securities. You would, after you have money transferred into your brokerage account, you can then search for the security you'd like to buy through your brokerage. Usually, the companies you would like to purchase if you're trying to buy common stock of a particular company, usually they'll have a ticker symbol, and it's sort of an identifier slash for a corporation on the stock market. So here I have some examples, things you may have seen like Apple, Tesla, Pfizer, and I have one ETF, which is the Vanguard Total Stock Market, which I believe tries to have a very diversified stock of like thousands of companies throughout, I think, the US, or it could be the world as well. I'm not sure of the details of Vanguard's total stock market, but this is a ETF that, and as an example. And after you find the particular company you'd like to purchase, let's say Apple in this example, then you would place an order for this security. So, an example, actually, we're buying shares of Robin, which it doesn't exist. There's no public company called Robin. It's just an example that being used. And this case, in our example, we're purchasing 6 shares, and the market price for each share of Robin is $100. And so such that we're buying 6 shares of Robin for about $600. And there are many types of options, or I guess configurations you can do with your order. But the most basic is that you're going to purchase the shares at market price. So, which means at that time, whatever the cost of the share is, then you'll purchase those shares at that price. And with that, that's a general overview of how to purchase a security, in particularly like stocks, bonds, or mutual funds and ETFs. So now I'll give you an example, which is actually, no, this is actually more of a joke on how stock purchasing goes. So here is my favorite, I guess, humorous investors, crazy investors out in the world, which is Wall Street Bet. And they have a particular view they have a particular video that demonstrates how they how they invest and purchase stock. And I do not recommend this method of investing, purchase securities, but in a really terrible way, where you're just riding a roller coaster of watching your investments go up and down, and most likely losing a lot of it, as we can see here with Wall Street Bet. And yeah, that's it for my presentation. That's a brief overview of securities, and hopefully as basic as it can get.
Thank you very much, Mike.
That was great.
That video was amazing.
I wish we had gone over that part of the presentation before you gave it. Oh my gosh, that video! I don't know how helpful that video is to anybody who's looking to get into the stock market.
No, it shouldn't be.
Good movie, though.
It's a good movie. I don't know. All right. Well, first of all, thank you very much.
The movie was a lot like Mad Money on CNBC.
Just watching Jim Cramer go out of the trench and press different horns. So
you have to be a big fan of the 90-10 portfolio balancing act.
All right. Well, I hope one thing. So the reasons why we're doing presentations on these topics is because many members of the organization were just interested in getting into this. Like they've never, have gone into the market before, don't know how to do it, and what do they do when they get there? So I really appreciate the lecture on financial literacy. So thank you very much, Mike. When I see your sources are Reddit, it's like, oh. All right,
That's for the video. I have to give credit to that very memey video.
I understand, but if I was a professor and I was looking at these sources, Napkin Finance, Reddit, Wikipedia. Okay. All right. Does anyone have any questions for Mike?
Did we invest in gold?
I don't think he's allowed to give actual investing advice. He's allowed to talk about some of the mechanisms.
Yeah, I'm no fiduciary, so I can't give you any proper advice.
Even if you were one, I still have hesitation.
That's true. Yeah, you should be apprehensive if I was a fiduciary, especially with the sort of influences that I lean to.
This is also interesting because perspective from a younger generation on how they look at the stock market, right? Like, at least in my day, the stock market wasn't that easily accessible. Like something like this, where you guys are just playing around and just buying shares willy-nilly, because there's no fees, right, when you buy shares?
No, it's because Robinhood was the first one to initiate that zero commission fees when trading. So
Okay.
after that, a lot of the brokerages started following suit as well. And
Okay.
then, yeah, it's
Can
like
you
a very
also?
low barrier. And I mean, I know this is anecdotal, but like, you see some of these things on Wall Street Bets where these, it's probably a joke, and the internet likes to lie, but you see jokes about like these teenagers that are getting into investing, and they're just like, especially if they follow the advice of what's going on, of like just throwing your money into like the new hotness or the next hotness. And they're like young, and they're like teenagers, and they're just like playing with money like that, and when they
Isn't there
get
any?
burned,
Isn't there any type of regulatory process?
well, yeah, there should be the SEC, right?
Well, my
Or-
daughter's seventh grade class, they did a stock picking contest, which was not real. It was virtual. It wasn't played with real money, and all she did was buy Pfizer, and she won.
Man, I have Pfizer. Tell me her secrets. It's not doing that great for me.
I think, Richard, so I think in terms of like my generation, maybe even Stacy's generation, back when we were working at big companies where they had 401k plans and stock options and stuff, some of that stuff we didn't really need to be smart because somebody was trying to be smart on our behalf. They just basically said, if you put money in here, we'll match it. I don't think companies do that anymore. I mean, I don't know. I haven't worked at those types of companies in a while. But and then when you left or if they got acquired, you had to put your money somewhere else. So I don't know. I don't know how many folks are, like in Michael's generation does that kind of thing, or if they have Vanguard accounts where they deposit money in, because we're always getting it, our tax people, our accountants are always telling us to like maximize the amount that you deposit or that you save for certain investments and whatnot.
Mhm.
I think it's like $7,000 or something max. At least that's what I'm being told. I don't know what I'm talking about. I'm just trying to like figure out what this generation is actually doing with their money. Come on,
So
spit it out.
Paying off college debt.
oh yeah,
Is
that
that
too.
really what they're doing?
Come on, Joe Biden, cancel all our debt, please.
Yeah.
So
Uh,
Carl. Oh, so go ahead, Carl.
Oh, I was just gonna say, yeah, this is a really good intro, and just a couple hours ago, I posted something on a fairly erudite variant of finance, and I was mostly talking about a couple friends of mine, Patrick Bolton and Frederic Samama, who've been promoting a certain kind of social mutual fund that has a social goal as well as an economic goal, and they're just creating broad index funds that invest more heavily in companies that have a smaller carbon footprint. So wherever there's two similar companies, they'll choose the one that is less wasteful about carbon. And there are many other social goal mutual funds, and many of them are run by Catholics, so they avoid gambling and alcohol, or many of them are run by other kinds of people with social goals, maybe feminist sentiment. But it's interesting that most of the social goal ones, the economists would tell you, oh, if you limit your choices that way, you're going to have worse returns. And the odd thing is that almost all of these social goal funds do better. And the way I think of it is, if companies are violating a social contract, it's probably a clue that they're close to bankruptcy and you should not put money there. And if they're doing a really good job socially, they're probably going to be doing a good job economically as well. So where possible, I think if you do have discretion over funds, like in 401k plan, or if you are part of a big organization that has a pension fund, you can have some influence on how that's managed. Try to get those put in social funds. And in the last year, like if you are part of a university, they have a big old pension plan, and it would have been invested in a good fraction in the oil industry. And in the last year, that part has gone down by half. So your social investment out of carbon would have protected you. So just something to think about.
Yeah, there's something to be said about the stock price of a company, like, you know, or if your leadership team is that visionary, that it has that type of introspection to voluntarily participate in a social goal as well as a financial goal. One thing, typically, it's probably in a pretty effective industry already, so it's kind of confident. Number two, it also does say a lot. It may say a lot about the leadership team and its thoughtfulness and their ability to withstand, you know, just jolting short-term visionary actions on behalf of their corporation. So Mike, a process question. If you buy and sell stock within a year, and once you sell the stock and let's say you made some money, what does that mean for your taxes?
Oh, so yeah, there's two types of taxes. There's short-term and long-term capital gains tax. And if it's sold within less than a year, then there's for sure those gains, or I guess the money you made from selling that stock, subtracted from the cost that you bought the stock at, is going to be taxed as ordinary income, or as far as short-term capital gains goes. As far as long-term, I don't remember how long you have to hold, but it's like more than a year or 2 years, and then it'll be taxed at say 15%, I say, or depending on also on things like your income as well, I believe, right?
Yep. It comes
Yeah.
into it. Yeah.
Yeah.
So it's meant to deter, well, I don't know if we can deter it, but just shorting the market, or just buy and sell, day trading.
Yes.
Cool. Does anybody else have any questions or comments on this industry field? Charles?
Yeah, I have a question about the puts. So, does that mean you have to have shares in the first place, or can you end up with having negative shares?
So if you have put options, then you don't have to worry about, you don't have any shares. If you're shorting, then you have to worry about, you know, you can negatively lose money, infinitely actually negatively lose money. With put options, there's a fixed amount of money that you can lose.
No, you have to have a. I mean, you not anyone can just sell puts. I mean, that requires some, you know, some coordination with your broker.
Oh yeah, that's right. So sometimes you also have to apply for I guess a higher level of access, or I guess authorization, as far as investing with your brokerage, to have access to options to purchase or sell.
And there are margin. I mean, you have to meet certain requirements on how much capital you have and how much you can trade.
Yeah, in a way, but it's gotten a little bit loose. As Rich just mentioned, Robinhood makes it pretty damn easy to buy and sell options.
I mean, you can make a fortune selling puts on the market. I mean, that's essentially what long-term capital management was doing. But when the market went south, they almost crushed the world economy. I mean, it's I don't know if Robinhood would allow. I mean, I've seen people who run entire funds based on selling puts, but eventually that goes south.
Yes.
I mean, I think most people would be doing so, like individual investors would be doing something like covered calls. I mean, anything more sophisticated than that, you're going to really get yourself into a. If you don't know what you're doing, you're going to get. It's not something that's. Well, let me put it this way. Years ago, I was offered a job at a company called Peak Six, which handled most of the retail deal flow for options. They're like a market maker, right? And their entire strategy I know the guys there. I came out to Silicon Valley instead. The entire strategy was for every retail position, they would just take the opposite position.
Mhm.
That was their whole trading strategy, because they knew the retail investors didn't know what they were doing. And so in the aggregate, they made money. But eventually they did something stupid, like started selling puts to try, they got greedy, and, they collapsed. So that's, it's a very, very dangerous thing to do. I mean, you can do it, but there are certain, you definitely, I don't know what Robinhood's constraints are, but that's a good way for them to go out of business if they're allowing just their arbitrary customers to sell puts.
Somebody should explain what a covered call is.
Michael, do you want me to do it? Do you want to do it?
Charles?
You can go ahead, Charles.
It's just, if you have a stock, a covered call just allows you to protect the stock in the event that the price drops. It's like a type of insurance product.
Yeah.
And so, you when you own stock, you don't, you're maybe concerned that the price will collapse. And the primary function of an option is you buy you sell a call option against your against the stock you hold. So then, in the event it collapses, you're not on the hook for it. And what people do is that these covered calls, they do this in their retirement accounts, and so you can make little bits of money. In fact, so that's essentially the idea. It's a very common strategy in people's retirement accounts. It can be effective.
Yeah, so it's a way to use options for a very conservative insurance policy rather than crazy ass trading.
Right. And I can tell you, my friend Matt, who, if you're interested, now has his own hedge fund, quant fund. He ran the equities group at BlackRock, and I used to joke with him, all you do is sell covered calls. That was like the whole strategy, Of course, you have to price them, right? You have to know when to buy them and when not to buy them in order to be effective, and that requires some theory around pricing the option volatility. But essentially, this is the largest fund in the world, and that's essentially what they were doing. That was the bulk of their strategy, was just, a covered call strategy. That was one of their primary strategies. So these things are very, very popular. And from an retirement account, if you want to get into options, I would recommend that. If anyone's really interested, I used to work for a company that was really, really slimy. This is the only company I've ever had to go and get an attorney and try to get they were just, they wouldn't pay me, they were just slime, but they were basically teaching people how to trade options. And it was just, because I was living in South Florida with my uncle who was passing away, and so I needed a gig to do while I was there. And I saw the whole side of how they do the retail options trading and all of this stuff, and build options trading software. And be very careful with this kind of stuff. That would be my recommendation.
Yes, agreed.
So for the options, well, this might be getting a little too specific. There's this section on options that Robinhood designates as, here's the Greek. So they show all the different changes and all these statistics on an option. I have no idea what we're supposed to use any of this for. There's the delta, the gamma, the theta, the vega, and the rho for an option.
The idea in a lot of options trading is that you're trading a market neutral. You're market neutral.
Mm-hmm.
So you're assuming that the market can go up or the market can go down, and what you're doing is trying to trade around those motions in the market, and you're making the assumption that the market eventually is going to be stable. And if there's and what you're trying to do is maybe hold like a gamma neutral position. So you're going to construct some fairly sophisticated position over a number of options to ensure that your gamma is neutral, so that you don't get hit by some weird market fluctuation. A lot of the guys who did this when I was involved with this, this was stuff where it's more like playing poker. You're usually working in an illiquid market, and you're trying to guess what the other side of the other guy is doing, and so you're very much. It's a very much that kind of game that you're playing. You can certainly make bets, like if you think the price is going to go up, like if you think, Google's going to go up, you can make a bet that Google's going to go up, and you can make like, it's called a spread trade. And the point is that if Google goes up, you have a huge amount of leverage because you don't actually own the stock. You just buy the option. So you can it's an enormous leverage. You get an enormous gain in wealth if the thing actually goes up. But if something like the volatility shifts or some other shift occurs, you lose everything basically. So in an option, the difference between options trading and stock trading is that, I mean, the primary way to think about it, I would say, is that with a stock, you own the underlying. So if it goes up or it goes down, you still own it, right? And so you might, if you're a retirement account and you're trading stocks, you might buy a covered call to prevent the market from collapsing like it did, like it does every 10 years or so. But with an option, you only own the option. So if the options trade goes south, you lose all your money, everything. So if you spend $5,000 to execute an options trade and the options trade doesn't work, all that money's gone. It's not like a stock. You buy $5,000 worth of stock and the stock goes down to $4,000. You only lost $1,000. With the options trade, you lost but if it goes up, if it's 5,000 and it doubles in price, you might make 10,000 off that trade. Whereas if the stock goes up, maybe goes up, you might make, you invested 5,000, maybe you make 20%, but it's not like making 100% or 200%. So it's a much higher risk, higher reward type strategy.
Hey, Richard.
Mm-hmm.
And maybe Michael. So with respect to what happened at COVID and people losing their jobs, can somebody talk about because the stock market sort of tanked, didn't it, for a while? The people who lost their jobs, were they taking their money out of the stock market? Or can anyone address that, what had happened and what's going on with it now? Because it looks like it's sort of stabilizing. Or am I missing?
The answer is yes. Entire market is unequal. I think it's very an unequal type of recovery among different sectors.
Yep.
There's a famous example right now. There's a company called GameStop. And so it's a physical store, retail store.
Yep.
That sells video. Okay, so you know about it.
We all know. Yeah, we know that very well in this house.
For some reason, within this particular pandemic, I'm looking at it right now, the past year, it's up 725%.
Whoa.
And that's when they were about to close too. Before this pandemic, they were almost on the verge of bankruptcy, but video games, because of the pandemic and quarantine, have shot through the roof.
725% to the roof?
And I don't go to a GameStop. I buy my games digitally online nowadays. So
yeah.
Well, the PlayStation and Xbox and Switch, there's been so much demand for video games.
Yes,
but
that
Walmart,
shouldn't have.
Target also have a stock of those too.
But yeah, exactly, right? Like the GameStop itself, the business model seems so outdated for today's distribution of games.
Yeah.
And if you're saying that, shouldn't we see increases in the game console manufacturer stock?
Well, I think one of the reasons why, even though digital is a much easier way of doing it, there's collectors out there. Like I still like having disc versions because it's nice to have them on a shelf, like a book collection. So there is that point of view too. I mean, there's collectors out there that, they have thousands of video games, but yet you can have them all on your phone or on a digital format. So,
but I'm not sure if whales themselves are able to support. Okay, excuse me. Whales means these people that buy these collectors or spend thousands and hundreds of thousands of dollars on these special editions and whatnot. But I don't think whales in themselves are able to support like GameStop on its own.
Yeah,
Charles.
I to answer that question, I posted an article in the Slack channel. There's some questions. Why is the market going up in the middle of a pandemic?
Mm-hmm.
And the conclusion is that it's the rise in savings. People are not spending money, and so the rise in savings has basically created a tide lifting the value of almost every financial asset. And this article, and the Fed plays a role in this as well. But there's an article from the New York Times that goes into some detail about this.
Yeah, I think Paul Krugman, the Nobel Prize winner, wrote that article.
Let me check.
There's also
No, no, it's written by Neil Irwin and
But he said something very similar too recently.
it could be. It could be.
I mean, most Americans don't own stock, so it's not what most people are doing that causes the stock market as a whole to rise and fall. It's more about where the money has to go somewhere. And if people want to pull it out of real estate and they want to pull it out of oil and they want to pull it out of, gold, or whatever, I'm not saying they're doing that right now, then it has to go into the stock market because there isn't any place left to put it.
It goes to the banks.
No, because banks have zero interest, so nobody is buying bonds or treasuries except like the Chinese government.
Yeah,
So
but
when there's no interest, you can't put it in the bank.
But the argument in this article, and I can't address the specifics, is that deposits in commercial banks are up 19%.
Yeah.
I mean, it's not a good investment, but that doesn't mean people make bad investments, right? But that's essentially the argument being made here.
Well, what I'm saying is, if you look at the price to earnings ratio, any company can be thought of as a money-making machine, which is one part of its reality. And the price to earnings ratio tells you whether the machine is good at making money or not. And if it's above like 10, it's probably overpriced. And if you look at nearly all the stocks, the price to earning ratios are really high. So there's too much money chasing too few good companies, and the stock market is kind of all over bought. And so
that for sure.
And so it's, and it's kind of, there's no place safe to put your money. People even try to put some of it in places like Bitcoin, which is a crazy idea. But, that's a terrible currency, but I like to say I hate Bitcoin, but I also hate the dollar and the dong and the yen and the euro and the mark or whatever you've got out there. All the currencies are bad. So, sometimes the stock market rises just because the money has to go somewhere.
I think there's a lot of money coming here from Europe because of Brexit and some weakness in European economies.
GameStop? That's the question I had originally was. And so something of, when you're observing the market, just very casually, is, man, there are these targeted companies that really, it doesn't make any sense to a retail investor, right? Like to just consumers. And I find a whole premise of Jim Cramer yelling at you, telling you to buy stock, a really sort of evil implementation, because these are just retail stock owners. Now you have Wall Street Bets, who's also Jim Cramer on steroids, influencing the crowd to be able to actually put money and pull money from different companies. And what we've seen on Wall Street Bets recently was that it was actually infiltrated by Chinese operatives promoting very specific companies that are Chinese-owned companies. And the community had to look at them like, whoa, wait a minute. We just got fooled by this Chinese operative, telling us to put money into this new Tesla competitor. And so, just like Jim Cramer, he's not regulated. He's on TV. He can just say whatever he wants to say. He's not telling you to buy it. He's just saying it out loud. I think we have to also be very worried about financial fake news and influencing capital markets in very specific, even for nationalistic reasons.
I posted something about the Confessions of Jim Cramer, which came up on one of the Tesla fan blogs. That's really a wonderful thing to understand what's going on over at CNBC, because his best fans always do the opposite of what he says.
Yes, we did a study on this. I have a friend who was at Graham Capital Management, which maybe 20 years ago was a big deal. And they did a study where he showed that Cramer's almost anti-correlated with the market because he's too far. He's late. He's always late with the market. So you'd make zero. You'd actually lose money investing in him. So the thing to do would be the opposite.
Well, in fact, that's his plan, according to his confessions on YouTube.
He tries to drive stocks up so he can short them or something like that.
He doesn't do any trading. His friends do it.
I see.
If he did that, he'd go to jail.
Right.
But if he gets a herd of flying monkeys to do his evil work, then he doesn't actually have any risk of going to jail.
Yeah, it's terrible stuff.
Yeah.
It's just
So
terrible.
please steer away from Wall Street bets. It is Jim Cramer for millennials on steroids. And they're very proud to show how much they lost too. At the end of the year, I see if any of you have Spotify and they show you your statistics of what you listen to at the end of the year, on Robinhood, they show you the statistics of how your portfolio did. And I see people like going, look at this, guys, $55,000 lost this year. Like, wow, okay. He's reconciling his financial losses with karma points. Great. It's a very dangerous trap that you can feel.
Yeah, it is kind of weird how they rationalize their significant losses.
Yeah.
With like internet cool points, I guess. Internet.
And there's that one teenager who got Robinhood, and I think he was down 120,000 of his parents' money, and unfortunately, he committed suicide because he thought that was the end, right? Like, it's 120,000. Yes, it's a lot of money, but dude, you got your. But again, right? All of this as a cautionary tale that if you do decide to go into the market, be as financially literate as you can before you even enter, and then when you do enter, beware of fake news too. All right. Any other questions on this topic, guys?
I'll make a comment on something on the news.
Please.
So there's a famous study that was done by a guy named Lineweber at UC Berkeley when I was at BlackRock, and he showed that if you try to correlate the news with the market, there's a weird lag time between what happens that's been reported in the news and what actually happens in the market. And it looks as if that just before news gets reported, people are acting on it. That's what it looks like if you look very carefully at the data, which suggests, if you're a bit of a conspiracy theorist, that most of the market is driven by insider trading. And
you may want to tell your friend to include Congress's purchasing that data.
Oh yeah, they're yeah. I mean, that's but it was just an interesting study that we know this stuff in the markets. The only place it doesn't happen is in China. And in China, there's absolutely zero correlation between what goes on in the news and the markets. It's as if it's an entire system of disinformation. So there is a correlation here, but it's just too late. Like it's like lagged out. 70% of the news of the market motion occurs specifically before the news events are published. So that was a bit of that's sort of just one of the apocryphal things we knew about when we were doing this kind of stuff, that it's very hard to, or the other way to say, you have to spend an enormous amount of time trying to get access to some unique form of information that you can trade on and get it before anybody else can get it.
So I can speak on a little bit of the specifics of that. So when I used to work at the patent office, our portfolios are heavily investigated because we are top secret government officials, and if we make rulings and judgment calls on certain cases that involve large companies, right? Whether it's like allowing a very significant patent or denying a patent in a certain area, we cannot purchase any stock in those companies in that field. So I cannot be in the telecom, even 3 years afterwards. I cannot purchase any stock in that field. If it's part of a mutual fund, it's okay, as long as it's not an ETF in that area or something. But that means it's really ridiculous. I'm like, for sure, right? Like we had news that we know 7 months ahead of time, hey, Samsung's going to lose this case. We already know that. And we have a 7-month lead time to it before it reaches news and goes like, oh, Samsung loses landmark case, and they're going to be having to pay a license deal to Apple for this much over this time. Because we don't know the actual court proceedings of what's going to happen, but we know they're going to lose because we see the evidence.
Yeah, but it's a good time. It's a good thing you don't trade on that information, because the fact is there are so many insiders that when the news actually comes out, the stock will probably move the opposite direction.
That's what we observed. That's actually exactly what we observed, is that it did the exact opposite of what we thought it would happen, because there were all these other movements that were happening, which we couldn't tell because it's a black box to us.
So that's very interesting. That's very interesting. When we were at BGI, one time BGI was the largest hedge fund in the world, and we had we worked on this group that was supposed to use it was a scientific active equity group. So we used scientific methods to predict the market. And the primary algorithm that worked the best, when I got there, they told me, I knew the guy who invented it, was called the whisper number. And the idea was that we would go to all the analysts in the industry and we would ask them where they think the market's going to go before they publish their analyst report. And then we would trade on an aggregate of that. And that was argued. And then eventually Elliot Spitzer came in before he was the one who had all sorts of trouble, right? Spitzer came in, and when BlackRock acquired BGI, they looked into us and that had to be shut down. So they made an agreement to stop it. I remember when I was there, that's insider trading. Of course, it was an entire system but they argued, well, it's not really insider trading because, we're just asking people who are in the industry and we're just taking an average, and I'm like, no, I mean, the entire system was built on this. I'm like, really? And they had all this fancy, all these quantitative algorithms and all these things they would do, like out with research teams. But the thing that worked best was basically, they call it the whisper number. So it's a very famous case that they had to stop doing that. Then of course they're not doing very well right now. But there's a lot of that going on, and that's well known. That's stuff I can tell you about that we knew was going. And it's just so it's a bit of it's just a lot of that kind of stuff, right? I mean, people somehow know things before other people know it, and that's a lot of what's going on. In fact, the entire company I worked with before I came with you guys, I was at GLG, or I was the distinguished engineer at GLG. GLG is their entire business model revolves around hedge funds being able to go out and make phone calls to people and ask them questions about what's going on in the industry. That's the entire. I mean, they're like $1 billion operation. All they do is they will, like, you're a hedge fund. You want to make an investment in some new kind of drug. Like maybe I want to invest in angiotensin, right? So I'll call Richard up and I'll pay like $500 an hour to speak to him, to ask him what's going on with angiotensin. Mm-hmm. And there was always and GLG. I mean, GLG was started by members of the U.S. State Department, so this is not a rinky-dink thing. These guys were very well connected. But they got in trouble too. They got in trouble because obviously, there were people facilitating insider trading this way, and they got in a lot of trouble, and they had to implement all sorts of control measures to ensure that you weren't just calling people. They weren't facilitating these phone calls between people in the hedge funds and people in industry who were giving them insider information. And this was their entire IP was the compliance model that they built. That they had this compliance system where you had to agree not to do. But in the end, we weren't listening in on the phone calls. So we had to implement this whole legal system that would track when you would go in and you would sign all these documents to say that, you weren't going to ever share any information that would violate the IP of your employer or would provide inside information, this kind of thing. But I mean, it's a lot of there was always some question as to, what are other people doing, right? We weren't the only network doing this. So
I would love to hear actually from Megan, Micah, just, what's your relationship with the stock market? Is it something that you guys follow? Is it something that you count on as part of your financial portfolio in some ways, or you want to stay away from it?
I have a ton of student loan debt, so it's not even an option for me because if I default on my loans, they go right after stocks or any investments that I have. So it's never been an option for me.
Gotcha. Okay.
Yep.
Alright.
But it is definitely something I would like to get into. And there's stocks that I would love to invest in at this moment, but until I get my student loans paid off, there's nothing I can do.
Gotcha. Okay.
Yep.
Megan?
I haven't waded out beyond the shallow waters of investing in 401ks. I still have one tied to when I worked for Electronic Arts that I'm not allowed to contribute to anymore, but is tied to their company's manager investment portfolio. So I don't mind that I can't touch it. At some point, I would be interested in paddling out a little farther and maybe looking at things myself, but I would still want somebody who knows what they're doing to guide me a little bit. Apparently, I'm risk adverse when it comes to finances.
Okay. No, that's good. It's good to know who you are and be comfortable with it. I know, Andrew, you're still in college, so I hope that you're not like playing the market aggressively. Do you have any as a college student, do you have any perspectives on the stock market?
I don't know a whole lot about it, to be honest. I think it'll be something that I'll get into at some point in my life. I can see myself doing that in the future, but I don't really know enough about it to make it really any comments on it, to be honest.
Yeah. No, that's exactly what I was looking for, just to see what do young people as well, what are their perceptions. JC, do you have any comments on the stock market?
I have my own options trading account with TD Ameritrade.
Okay, cool.
And yeah, I've been following WSB since 2016. So,
Really?
Oh my.
yeah,
Okay.
back when people were trading 3 times leveraged UWTI oil stocks or oil ETFs.
Oh man, back before
But
Robinhood had
yeah,
any
it's-
restrictions at all.
yeah, Robinhood really loosened up the rules.
Yeah.
But I have 2 accounts. Like one is Fidelity, so it's a longer term. The other one's TD, which is just, the YOLO money.
Oh yeah, by the way, when we say YOLO money,
You only live once.
you only live once money. So it's really pretty much just straight up gambling money when you hear people say
Yeah.
YOLO money.
It's just for fun.
Oh, I mean, it could be worse. People are YOLO moneying their freaking life savings. So
Yeah.
Ooh.
yeah.
All right.
But I mean, well, I think
Please.
Carl mentioned earlier that the banks don't really give interest anymore, and where else is there to put your money? So, stock market seems to be the place to put your excess income if you want it to appreciate significantly, at least.
Yeah.
Yeah, that's a weird choice that we have, huh? Like, a bank account is lower than, we can't meet inflation.
Right. No, it's crazy because I used to I would ask like my parents or my family members in the past, like, what was the interest rate of banks back in the day? And they would say, it was like 25% under Reagan or whatever.
Was it really?
Wow.
It was like 20, it was very high. But also that meant that your interest on your house payments, your mortgage would also be high. So.
Well, there was inflationary periods where your money was getting smaller. So, used to be able to, fill up your car's gas tank for $20, one bill. I guess there's one other thing to think about the stock market, and that is, unfortunately, it's the way that our whole culture, society allocates capital to institutions that are going to change the world. And when the stock market's crazy, we start to make crazy decisions about how to change the world, and then it ends up damaging the world. So I sent out an email about that to the energy group today. And if we could solve that one problem and make sure that the companies with the best long-term plans got more capital to play with, and we could take it away from the companies that are about to go bankrupt, then climate change would solve itself. Because if a company wants to be in business for 5 or 10 years, they have to solve climate change, or they won't. So that's a much deeper question than just where do you put your money. But the companies that have good long-term plans, the capital they need to implement them, and don't punish them if they appear to lose money some quarter because they're investing in the future, then we can really change things.
Carl, let me ask you something on that. What do you think about the SPAC movement that's been pushed through by the Salesforce founder and this guy who owns the Warriors? I can never pronounce his name. You know, I mean, these guys are big investors in. Excuse me.
Joe Lacob?
No. The investor from Social Capital. Chamath.
Yeah.
Yeah, and I mean, but Mark Benioff has been involved with him, and they've made a lot of investments. They're very interested in fission, fusion, and carbon capture, and they're on talking a lot about how the way to do this is with SPACs.
Benioff is really smart, and I'm not as up to date on that as I ought to be. One thing I've enjoyed is the stuff about a special kind of option that, well, if you can make the default way of owning shares include a call option that you get if you hold the share long enough automatically, then you can force people to try to own stocks for 5 years, and then they have to think about what the stock's going to be worth for, say, 5 years. And that would really change things. So if we could force most of the big institutions, what individuals do doesn't matter that much. It's what big funds and pension plans do that matters. And there are ways that you could adjust the way the equity is structured. You know, in private companies, big investors always get warrants, which are a bet on the upside, like an option. And that helps the big investors in a private company be loyal and supportive of the company because they know they have a stake in the upside with an accelerator. And so the idea would be just to do the same thing for public companies that normally happens for private companies, so that the public companies could grow as good as the private companies can.
That's essentially the idea of a SPAC. If you're someone who is going to, if you're a private investor and you're investing in a SPAC, you don't get a management fee the way you would if you owned, like, say, a VC fund. You're not charging 2 and 20. What you get are warrants. So you take a company public, you find some company, you take it public, and you get a bunch of warrants in the company.
Yeah, that doesn't necessarily mean it's a long-term investment. A lot of the companies go public just because it's a way of, selling people something they want that has no long-term value. So,
yeah, there's been some famous. There's been a couple famous scams, just outright fraud, like with Nikola. What was the company, right?
Nikola,
the self-driving truck company.
And WeWork.
Hydrogen fuel cell truck company.
Right.
Well, the truck that only goes downhill because it doesn't.
The truck that only goes downhill. Yeah. But I mean, the whole point of this is that their argument is that for the same reason you commit fraud is that, look, when you bring a company IPO, you have to have a proven business model with some recurring revenue. And the argument is that, well, look, when you run a SPAC, you don't have to do that. You could just say, I'm going to bet on the future. And I can take a company public without having to go through the financial due diligence or maybe financial restrictions that the SEC puts on an IPO. And so I can basically say, hey, we're going to make a fusion company. We're going to make carbon capture, and we're going to go public, and you're betting on the future. You're not betting on some proven business model, which is going to pay a dividend. And that's essentially their argument around why SPACs are good. And then, of course, the same reason, you have to, someone could come in and pitch a car that a self-driving truck, and it's all fraud because you don't have the kind of, fiduciary responsibility that you would have in an IPO. You can basically sell snake oil, I guess. But I know that
or you could be selling oil, which is a fraud because we have to stop using that stuff. So we've seen that come, to roost to the point of the oil companies being half of what they were a year ago. So
I just bring it up because I know that he's a big time proponent of fusion and fission and carbon capture. And these guys are going out, this is their pitch. And, I'm not sophisticated enough to know whether this is, what's going on. But that's the pitch that they're making.
Yeah. So it's really important we figure out as a society how to do this right. And part of that is demanding that the institutions that we have some say in, like if we're working for a university and they have a pension plan, they should have divested out of oil. And a lot of people were telling them to. And the ones that didn't are sitting on a smaller fund now. So when I was a high school student, the big question was whether to divest from South Africa. And it took me a while to figure out that that was a good idea, but it was a good idea, had a good impact on South Africa, and it was economically a good idea. So, these social funds are really important, but if we want to invest in our future, that means moving the big bucks where they will help our future. And that depends on where capital gets allocated in the markets. So.
It's kind of happening in our political climate as well. Some members of Congress are no longer getting contributions. They're daily stipends from corporate donors. We'll see how long that lasts.
Yep.
All right. Does anybody want to see a picture of the truck that only goes downhill? It looks super cool.
Let's see it.
All right, let me share my screen. Here we go. There you go.
Yeah, it does.
Yeah, right? I'd invest in those pictures.
Well, they had a whole video.
Oh, yeah. People were wondering, wow, that engine's super quiet. Yeah, it's a fuel cell that doesn't exist.
There was a show back in the 80s called The Highwayman.
Mm-hmm.
Have you heard of that?
Mm-hmm.
It kind of reminds me of that truck. It had like a helicopter built into it. It was kind of like a Mad Max type show.
Mm-hmm.
Here, I'll show you. I got it right here. But this was his truck. This was an 80s show, so it's not the. It kind of reminds me of that.
Oh, God. Is that a helicopter on top of a truck?
Yeah. It was like Knight Rider and Airwolf.
You can clearly see the helicopter.
Yeah, Highwayman. It was like Mad Max meets Knight Rider. It was pretty awesome.
I don't say this often, but turn it off. Turn it off. I can't stand looking at that engineering.
Yeah, but when you're a 6-year-old kid, that was like the coolest thing ever.
Okay, cool. The funny thing about Nikola is the concept that they have, the engineering is so old. Like hydrogen fuel cells is back in the 80s, right?
Actually, I went to a TED conference and GM had brought a lot of really great things. And one thing, I was born in 1964. They brought a fuel cell van at one point I had a 1965 blue car. So they brought a 1968, I believe, fuel cell van to TED to show it off. And it was the same color as my 1965 Buick Skylark. So I thought it was the coolest thing ever. But basically the technology hasn't changed since 1968.
1968, okay. Yeah.
What year was your Skylark?
Oh, it was 65. So it was 1 year younger than me when I got it when I was 16. I learned a lot about tool use and physics and chemistry, trying to keep that thing rolling.
Did you have the hard top or convertible?
I had the hard top.
The hard top?
Yeah.
I think it that one.
Yep, that's it.
Nice. Very cool.
And I did a very good scientific study. I just discovered that if I drove it really conservatively and slowly, I could get 14 miles a gallon. and if I drove it as fast as I possibly could, I would get 14 miles a gallon.
Oh, that's American engineering right there.
That's amazing.
For those of you who have rode in my car, that's also I have a hydrogen fuel cell car. And man, one really bad point about this technology, if it's raining and you're pumping fuel into your car, the pump will get stuck to your car and ice over. So I have a glove box compartment filled with those hand warmers, you know, the chemically induced hand warmers, just to melt the ice on the fuel pump so that I can actually detach the fuel the fuel pump from the valve of my car. Otherwise, you're just stuck there in the rain.
I'm surprised they don't put some kind of like a heater or something on the edge of where it connects. So
putting a heater near a hydrogen output
well,
port
not something that would ignite, but just something that would keep it warm.
It would require electricity to just be in that general area, which is not great.
Yeah, that's true.
All right. Cool. Does anyone have any more comments?
No, but Mike, thank you very much for
thank you
putting this together.
No, thanks to everyone else that contributed to the conversation afterwards. A lot of interesting things I was able to learn as well.
As always, this group always delivers. We start talking about Stonks, and then we start talking about Jim Cramer, hydrogen fuel cells. It doesn't matter. It goes everywhere. But it's awesome the technical ability of everyone to contribute, and I really appreciate everyone contributing their ideas to this conversation. All right, guys, have a good day. I will see some of you later this afternoon.
All right, take care.
Thanks again.
All right, see you.
All right, bye.